help.
Because we don't have much transparency.
Simply send us a video where you explain your idea.
Keep an eye on because
Make
that
it
could
clear,
be kind of
concise, and
Yeah, I
compelling.
think I answered a little bit ago.
Hook us in with your passion and vision.
Continues to be strong.
Don't
That's
forget
the
to
one thing.
include your
Honestly,
contact details so investors can reach out directly.
Small business confidence
This
come back
is
a
your
little bit. We're not
chance
seeing
to
small business
shine and get
investment.
your
That's why we
idea in front of
think
people
with the
who
higher
can make it a
productivity that we're seeing in our
reality.
country, with inflation
Imagine
being
turning
last
your
year's problem,
startup
the Fed
dream
still
into
can
a
cut.
thriving
One more, I'll leave you on
business.
this. When the
It all
Fed is
starts
cut
with
the
that
market
one
at all-time
simple
highs.
step.
We took a look at this using
So
Bloomberg
what are
data
you
back in
waiting for?
1980.
Right.
1 year later,
Grab
S&P's
your
been higher
phone,
20
hit record,
times. It's happened 20 out of 20
and let
times
your
1 year
idea
later.
fly.
So we just saw a cut of all-time highs.
The
You know,
future
recently,
of your startup
might see
could be
another
just
one cut
one
near
video
all-time highs
away.
here in December. That
Remember,
is a bullish thing.
be
Do not
clear,
fight the Fed is what they
be
taught us a long
passionate,
time ago. We'd still
and most
suck.
Yeah,
importantly,
that kind of still
be
holds.
you.
It always does.
We can't wait
Hey,
to
Ryan,
see
thank
what
you
you've
so much.
got.
Happy holidays.
Let's get funded
Appreciate it.
now.
Love being in your city. Thank you.
Nice having you in studio. Ryan Dietrich, he's Chief Market Strategist at the Carson Group, as we said, joining us here in our Business Week studio. All right, we want to get to back to kind of where we started our hour, and that is geopolitics in South Korea specifically.
Yeah, South Korean President Yoon said he will lift his martial law decree just hours after his dramatic move imposing it on Tuesday. He said in a televised address that he's called for a cabinet meeting, but its members haven't arrived. He will immediately lift the martial law when they convene, he said.
All right, back with us is Roz Matheson, again, Bloomberg News, news director of EMEA, typically in London, but as you know, here in our New York studio. So Roz, so this headline crosses, we talked a lot about it, broke it down, but I don't know, what's the read on this?
Well, the read again is like, what on earth just happened over a
Thank
very
you.
short
That's what I said to Carol during one of the breaks.
Time.
I was like, what happened in the last 24 hours
Still
here?
trying to work out what's going on here. But basically, as you say, like he came out of the blue, surprised everybody with this declaration of emergency martial law. Everyone ran to Parliament. He tried to stop people getting to Parliament. They got into Parliament. They voted against it. And now hours later, he's saying he's going to rescind it. So begs the question, what was he attempting to do with this?
Is there a strategy here, or does it just feel like things just kind of happening, I don't know, it just feels very randomly?
It does. Did he feel he had nothing to lose? Was he hoping there were secret supporters in the cupboard who were going to come out in this moment and support him? Suddenly there would be this groundswell of support for him when he was already unpopular as a leader. And certainly a gambit like this is unlikely to endear you towards people in South Korea. So backtracking very quickly, and the question is, what does it mean for him now? Does he have to step aside? Is he forced to step aside? Does it hasten this conversation that was already going on about impeaching him as part of the political process? Are his days numbered? And if so, are we heading towards a change of administration again in South Korea?
What's the message that it sends about South Korea around the world? And I'm not just talking about to the United States and to North Korea, but also to China and other parts of the world as well.
Well, the good thing is it seems like the institutions have worked here in this case. I mean, he attempted something, the institutions held up, Parliament did what it needed to do. The people of South Korea were very quick to say what they wanted from this, and they're very, they hold democracy very dear to their hearts in South Korea. And so some of those things do seem to have done what you would expect them to do in the minute. So that's a sign of robustness, at least in the political structure. But of course, South Korean politics has been messy for months. I mean, a minority government, Parliament not really working, questions over the budget, questions over the economy, and a country distracted by all of that. And so distracted South Korea, what does that mean for the region? And it's not good.
I'm looking at the iShares MSCI South Korean ETF, EWY is the ticker. It was down as much as 7%, now down about 1.7%. So we, of course, like to watch kind of market reaction, so not as bad as it was earlier. I'm also looking at our live blog. The White House says it wasn't notified in advance of President Yoon's announcement. The relationship, I mean, it's a pretty good one, strong one, right, between the United States and South Korea. So I wonder, is that a little bit of a breakdown or just things moving fast and furious?
Well, it seems like he didn't even tell his own party he was going to do it, let alone ring up the White House and say, by the way, I'm intending this. But it's also a question mark because we've got Donald Trump coming into the White House, potentially a very different policy on South Korea, because in his first iteration, he was very critical of South Korea, saying they weren't paying enough of their money to fund their own defense, threatening to pull US troops from South Korea to weaken military support. So it's a pretty tricky time for that relationship in general. And so you do need a strong leader in South Korea with a clear sense of purpose. And you don't need this kind of crisis environment because you're going to have to work out how to manage that relationship.
So appreciate it. Thank you so much. I know you're busy and having a busy day, but appreciate being able to kind of go through the headlines once again with you. Rosalind Matheson, EMEA News Director here at Bloomberg News, as you know, typically in London, but here in our New York studio. Ross, thank you so much. Again, appreciate it.
Okay, let's talk travel.
We're going to get a little bit lighter.
Yeah. You're
It's been quite a packed hour.
We've gone around the world talking geopolitics. What if you want to go around the world for tourism?
Maybe you can't go everywhere anymore.
No, that's a good point. Are people going to be able to get out of New York City today if you're flying out of New York City?
I'm a little worried. I'm supposed to fly out late tonight, and there's a fast-moving cold front moving across the city, New York City, bringing gusty winds and a chance of snow showers as it roars through. So fingers crossed that I'm going to get out of the New York Metro. But we wanted to talk travel. Haley Berg is back with us, lead economist at the mobile travel app Hopper. Haley, thanks for being patient. It's a shortened segment today, but tell us about what you are thinking on this Travel Tuesday as people think about making travel plans, and what are some of the deals out there?
It's a big day for travel booking. We're already seeing record levels of travel bookings and travel search demand today compared to what we've seen previously this weekend. The good news is, for those who haven't taken advantage of Travel Deal Tuesday deals, there still are many available. We're seeing discounts like up to 50% off hotels in top international and domestic destinations on the Hopper app and website. Major travel brands like American Airlines and TripAdvisor offering discounts and deals exclusively today. So there are a lot of offers out there, both for those home-based destinations, if you're thinking home for the holidays, and for faraway destinations, Japan, Germany, Cayman Islands.
Haley, are prices actually better today? You have, there's this concern that shoppers had, on Black Friday through Cyber Monday. The idea that, you're not necessarily seeing discounts. You're seeing discounts, but it's like discount of what, right? That's the question. You have the data at Hopper. Are these actually better prices?
We do have the data, and that's how we originally discovered that Travel Deal Tuesday was happening before it was even branded. We do price monitoring at Hopper. We monitor in real time the price of flights that customers are actually interested in booking. We make a prediction of what we think the best price for that trip is going to be, and then we send users notifications when that price materializes. What we see on this day, what we're seeing this year, what we've seen for the past 7 years, is the number of recommendations that flip to, this is a great deal, this is the price we've been waiting for, absolutely explodes on Travel Deal Tuesday. So we see 2 times more deals than we do on Black Friday or Cyber Monday, and significantly more than we see on the average day. So the deals are real, but you do need to be a little bit flexible on your destination or your dates if you want the lowest prices.
That flexibility. It's always like, Monday, and then come back, and I don't know. Sometimes it doesn't always work. Okay, 30 seconds, 40 seconds. What's the deal this holiday season? Is there one place in particular, one kind of trip?
Hawaii. It's the Christmas trip that many people dream of, and it's definitely top of mind for travelers this year. We have a lot of the home for the holidays destinations, Chicago, New York, Atlanta, etc. But I'm really seeing Hawaii, and I think people are craving some warm weather getaways.
Got a few direct flights now to Hawaii from the New York area.
And it only costs $50. No, that's
just throwing it out there. Do we have a Bloomberg News Bureau in Honolulu?
I don't know. Do we?
We might, if we do, or
Ooh.
even if we don't, we might have to set up a remote there. Maybe January.
How about Fiji or I don't know.
That works.
Somewhere in the South Pacific. I think a remote is...
Fiji Airways has offers today on Travel Deal Tuesday.
There it is.
Haley, thank you so much. Really appreciate it. Happy holidays to you. Haley Berg, lead economist over at Hopper, joining us from Boston. That's a lot.
Yeah, around the world in 60 minutes. We did it.
We did it.
What? That is going to do it for our hour here on Bloomberg Television. Up next, it is The Close. But if you are sticking with us on Bloomberg Radio, YouTube, or Bloomberg Originals for the rest of Bloomberg Business Week, we got a great program coming up. We're taking a look at the opportunity in distressed multifamily real estate. We're doing that with the CEO of Clear Investment Group.
Yep, we've also got the CEO of AWS. You're talking about Amazon Web Services, Matt Garman, coming up live. Do not miss it. We've got stocks moving up to their highs of the session, folks. This is Bloomberg Business Week. We continue on radio, YouTube, and Originals.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. Confusion in South Korea, a key U.S. ally in Asia. The president declared martial law. Protesters took to the streets. The country's parliament then voted to block it, and the president has just announced he'll lift it. But Vicky Barker reports it's raised a lot of questions.
President Yoon Suk-yeol made the announcement in an unannounced late-night televised address, claiming he will eradicate, quote, shameless pro-North Korean anti-state forces. That's a reference to the liberal opposition, which still controls South Korea's parliament and which has blocked much of Yoon's conservative agenda. But even the leader of Yoon's own conservative party has blasted the move.
At the State Department, spokesman Vedant Patel.
We are continuing to watch with grave concern, and we will continue to follow developments on the ground very closely.
The U.S. has more than 28,000 troops in South Korea. A Chinese national living in California on an expired visa has been arrested and charged with supplying North Korea with military and sophisticated electronic equipment. U.S. Attorney Martina Estrada.
This criminal scheme involved obtaining, in our country, military supplies and high-grade technology and then sending those materials illegally to North Korea.
Donald Trump's pick to be the defense secretary, Pete Hegseth, is back on Capitol Hill today, meeting with senators. Scott McFarlane is following.
He's got at least a half dozen appointments on his calendar. He's going room to room here at the Capitol complex. He is meeting only with Trump's most ardent allies, what we would characterize as the Senate's political low-hanging fruit.
President Biden continues his visit to Angola, the first by a U.S. president. He toured a slavery museum today, as Linda Kenyon reports.
A solemn location.
That location was the point of departure for an estimated 6 million enslaved Africans sent to the Americas.
Cruel, brutal, dehumanizing. Our nation's original sin.
And now, as Biden announced new investments in Angola ranging from a crucial rail project to humanitarian aid, he added history can be hidden but cannot and should not be erased.
It's our duty to face our history. The good, the bad, and the ugly. The whole truth.
Linda Kenyon, CBS News, Washington.
A New York jury has begun deliberating in the trial of a military veteran charged with using a fatal chokehold to subdue a man on a subway train. The number of new job postings rebounded in October, and assigned businesses are still seeking workers, even though hiring has cooled a bit. This is CBS News.
Love.
A rap star is making music history. CBS's Deborah Rodriguez reports.
Woke up looking for the broccoli.
Kendrick Lamar's new album, GNX, has soared to #1 on the Billboard 200 chart. His song Squabble Up is also #1, giving him all top 5 spots on the Hot 100 in a single week. That puts him in the company of only the Beatles, Taylor Swift, and his nemesis Drake, who accuses Lamar of using bots to drive up his numbers. Those numbers show Squabble Up is his 3rd #1 of the year, blocking Shaboozie's A Bar Song from a historic 20th week at the top. Deborah Rodriguez, CBS News.
Billboard says Taylor Swift's The Tortured Poets Department has been certified 6 times platinum by the recording industry. It was her 11th studio album. I'm Cammie McCormick, CBS News.
This
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, everybody. Yes, indeed. Bloomberg Business Week on this Tuesday. Carol Masser along with Tim Stenivek. And we are just about 55 minutes away from the closing bell. And
is that it?
Oh, what do you mean, is that it? I know.
Yeah,
I know.
time flies, right?
Lot
of news. Lot of news.
And we're just coming off our highs of the session when it comes to the U.S. equity trade. So it's interesting to see a little bit of a move up in the last hour or so.
Hey, we're going to kind of go to a lot of different places over the next 2 hours on Bloomberg Business Week.
Where are we going to go?
I want to start with real estate.
Okay.
And specifically multifamily distressed real estate. And we're not talking in areas like New York City, Los Angeles, sort of like the coastal cities here. Yeah. We're talking Syracuse, New York, Chicago, Illinois.
Okay. Yeah.
Well, that's where the company's based.
So interesting, right?
Yeah.
So different markets, right?
Different markets.
Get kind of a take. I feel like in a big weekend, we get a good read on the U.S. economy, courtesy of the monthly jobs report. That's another read on the housing market. We also are going to talk about kind of all the Fed speak that's out there and kind of count you down to that jobs report on Friday because earnings kind of over, and so we're focusing on U.S. economic data. And Jay Powell also speaking this week.
The Trader Bros. Carol, they're back.
Dun, dun, dun.
It's the revenge of the Trader Bros. We're talking crypto, some meme stocks, some penny stocks. Why are you shaking your head?
I don't know. Sounds like, playing markets.
Okay, well, it's been a good play over the past few months. Bailey Lipschultz and Vildana Heinrich are all over it. Bailey's going to be joining us from Chicago a little later in the program.
All right, looking forward to that. And then we've got a big interview. We're talking about the Chief Executive Officer of AWS, Amazon Web Services, Matt Garman, coming up live in our 4 o'clock hour. So you will not want to miss that. In the meantime, let's get a check on the trading day and your top business stories. Here's once again Amy Morris. She's in for Charlie Pellet.
Hi, Carol. South Korea's President Yoon says he will lift his martial law decree just hours after his dramatic move imposing it. Yoon has called a cabinet meeting and says he will immediately lift the martial law once his cabinet convenes. The won took a hit when he imposed martial law. It's now 1.7% lower, trading at 14.28 against the dollar. We do bring you markets all day long here at Bloomberg. The S&P 500 down 0.1%. Or nope, now it's up. See, everything's been kind of flat today because all the traders are waiting for this eco data. The NASDAQ is right at 0.2% higher, and the Dow is down 0.1%. The 10-year Treasury yield at 4.22%, and the 2-year yield at 4.17%. Intel's search for a new chief executive officer will focus heavily on outsiders. Sources telling Bloomberg Intel is considering candidates like Marvell Technology head Matt Murphy and former Cadence Design System CEO Lip-Bu Tan. Intel's board ousted former CEO Pat Gelsinger December 1st, and Intel shares right now are 5.5% lower. The National Retail Federation says the 5-day holiday weekend from Thanksgiving through Cyber Monday saw 197 million shoppers. That's the second highest number in the survey's history. Last year's record is more than 200 million. And David Ellison reportedly plans sweeping changes at Paramount Global, including cuts at the company's TV networks, billions of dollars more for streaming, and an overhaul of top management. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris, and that's a Bloomberg Business Flash. Let's go back now to Bloomberg Business Week with Carol Masser and Tim Stenivek.
Thanks so much for that update. Do appreciate that, Amy. Carol, many Americans agree there's a housing crisis.
Totally.
Radically different, though, than from the last housing crisis. So instead of the values of homes dropping too fast as they did during the foreclosures debacle starting in 2007, you covered that a lot.
Yeah. Oh, my God. I remember going to people in, I think it was Florida. Forgive me. I'm trying to remember. But talking to homeowners who were just, losing their homes, couldn't afford it. It was just a really, really tough situation and just such a low. And we know homes not only important for our people to live in, but it's often their biggest investment.
So fast forward a few years, and instead of home prices dropping too fast as they did during that foreclosure debacle back in 2007, they've stayed stubbornly high, locking many would-be buyers out of the market, raising rents and adding to anxiety about the cost of living. Amy Rubenstein has spent her career in real estate. She's seen the industry through different cycles. She's the CEO of Clear Investment Group. It's a Chicago-based firm, focuses on distressed, mid-size, multifamily assets. I think 300 to 1,200 unit portfolios in secondary and tertiary markets here in the U.S. The company currently has assets in Syracuse, New York, Columbus, Ohio, Shreveport, Louisiana, and in Illinois and DeKalb in Chicago. Amy, welcome.
Thank you. Thanks for having me here.
So let's talk a little about the overall market right now and where you're seeing opportunity, because we spend a lot of time talking about high prices.
Yes.
But you're going after a different type of market. Where are you seeing value?
Yeah. We're looking at renters who are renters by necessity and not lifestyle renters, so a little bit different than that housing market. But, we see we particularly love to invest where there's stable markets, not necessarily growth markets, because growth markets have a lot of speculation in them. Mm-hmm. They're really looking towards the future, what's going to happen, and they're usually priced that way. But we like markets that are very, very stable. And, of course, we do try to stay away from declining.
So stable, you're just saying not a lot of price fluctuation?
Well, I'm not even so much there, but stable as far as population, as far as rental growth that at least keeps up with inflation, as far as job opportunity and employment stability. So it's that kind of stable that we're looking for. Pricing is going to go up, right? That's as far as we've been in a period of time where multifamily the real estate market is really segregated as far as different asset classes. Sure. But multifamily itself right now has had a bit of a pause for the last 2 years, right? There haven't been a ton of transactions going, and now I think we're starting to see those transactions pick up, and so pricing will start to rise with it. But we did have quite high pricing in 2020, 2021, and then started to drop down 2022, 2023.
Where exactly do you play in terms of what you do with an asset when you get it?
Yes.
Do you own and operate it? Do you flip it? Explain for everyone what you do at Clear.
So what we particularly do is we look for assets that are distressed themselves in communities that are stable. And so we look for things that have severe problems, and then we solve those problems, and then we go ahead and turn around and sell it.
Okay, so what kind of problem, for example, a property in Syracuse or
high vacancies, high delinquencies. Sometimes that comes with some crime. Sometimes that comes with physical distress. Well, it almost always comes with some physical distress. And we're figuring out what are all those problems? Why isn't this particular property performing like the ones that are surrounding it? And then how do we get it to be stable so that we can then go ahead and sell it?
So in other words, when you buy a distressed property, it's not like everything's in distress. You're saying, here's one property and there's other properties, multifamily, around them that are actually doing okay. So why is it this particular property?
Exactly. That's what we're looking for, because then we understand the value of our
Because you're not
assets.
going to necessarily buy into an area where it's all distressed.
No, because that's speculative.
Yeah.
And then you have to guess, how do you get this whole community back up and running? Which is a thing. It's just that's a lot to overcome, right? So we're saying we understand the value of our asset because we know the value of all of our neighbors' assets. Now, our asset's not performing, so we have to figure out how to get it to that performance place.
In general, real estate is a pretty efficient market.
Yes.
What are you able to do that other players aren't able to do? Like, why is that thing sitting there distressed until you come along?
I think a lot of buyers look for, what is your incoming cap rate? What are you going to buy it? What's your NOI going to be when you first buy that property? And for us, that's not going to deter us if the property is negative cash flowing. Because what we're really looking for is, where are we going to get this property to? What is the NOI going to be when we complete this property? And what is the cap rate going to be when we sell this property? As opposed to, where is it now? Where is it now is just a variable. It's a place mark, right? So we're saying, all right, now we're negative cash flowing. Here are all the problems on the table. We needed to get it to this point, and we know exactly where that point is, because we're not trying to change our asset class. And how much time and how much money is it going to take us to get from point A to point Z? And that's basically what our company does. And when we raise a fund, we're looking to, our diversification comes from our geographic diversification, but the assets that we're buying all look exactly the same.
You keep saying NOI, net operating income?
Correct.
All right, so basically you're looking at expenses versus the income that you're getting from a property. So it's kind of a basic metric, but tells you a lot. What does your sector that you are involved in tell us more broadly about the real estate market?
Yeah, so we specifically are working with affordable housing, not affordable housing from a technical government standpoint. There's no restrictions on the properties that we buy, but we're servicing a tenant base that's somewhere between $35,000 and $85,000 of annual household income. And right now we're really servicing an area of great need, because we are buying assets and even selling our assets far below replacement cost. So when someone's trying to build a new property, they're not going to be able to compete with the pricing that we're going to be able to offer. And that's created a major shortage of affordable housing in the country, because the costs of construction are really high right now. With interest rates high, the cost of construction is high, and therefore new affordable housing is not coming onto the market.
So what are the rents that you typically charge in that kind of affordable affordable housing?
It could be somewhere on average between $700 and $1,200 of rent.
Okay. Yeah.
How long does it typically take you to turn a building around?
We're stabilizing anywhere from 12 to 36 months.
And what's the scale that you're able to bring, given that it's relatively geographically diverse? So you need to have different people in those areas. It's not like you have one local company that you work with that you can scale that goes around and fixes things up. You have to actually find those folks in each of these markets.
We're big on
That's not super
supporting.
efficient.
Well, we want to support the local markets that we're in. Those are the people that we're servicing. Those are the people we want to give the jobs to. So when we get to a property, we'll bring our staff out there to get it started and up and running, but we're really trying to help to hire locally so that we can actually help that community that we're in. It's beneficial for everybody.
How much is, though, about getting it up and running well so that you can then sell it off? Like, how long do you hold on to a property?
We're somewhere from 2 to 4 years usually. That's typically what we're doing.
Yeah.
What does turnover look like in terms of tenants during that time?
So our goal is not to displace people. We really want.
But don't you have to raise rent in order to actually make the changes and have the money?
The beauty of what we do is we're really trying to go for efficiencies of the particular property itself. So we're really trying to figure out, why aren't people paying their rent today? Why are there so many vacancies today? And how do we solve for that? More so than how do we hike up everybody's rents? Because we're not trying to gentrify our areas. We're really trying to dig into that particular community. We want everyone to stay in their places. We want them to pay rent. We want to be able to offer that affordable housing. We're not trying to price people out of that market. So it's less about raising people's rents and more about getting people to pay rent and to move into our buildings.
But if someone's not paying their rent, then they can't really stay, right?
So if someone is absolutely not paying their rent, usually we find that people aren't paying their rent for various reasons. Maybe they're not getting the services that they need, which is really why we have a massive shortage of affordable housing. I mean, yes, it's also because you can't get new construction, but it's also because you have a lot of owners who've run out of money and they're no longer putting money into their properties. And so someone has to come back and restore that value.
We've only got about 20 seconds left. You've been doing this for over 20 years. You founded your company back in 2003. I am curious, when you find that distressed property among other properties that are doing well, is it typically the reason it's not doing well because owners have run out of money?
Yes, that's what our fund is really based off of, just buying deals where the sellers have been in distress, where there are dollars that have been lost on the table, and we're going to come back and bring back that value. So that is.
Yeah, pretty interesting stuff. Amy, thank you so much.
Thank you.
Thanks for stopping by. Amy Rubenstein, she is Chief Executive Officer of Clear Investment Group, joining us right here in our Bloomberg Interactive Brokers studio.
Up next, you want to go macro?
I definitely want to go macro.
Let's go macro.
It's a big week for macro.
It is a big week. Stuart Paul, U.S. economist for Bloomberg Economics, is going to stop by here in the Bloomberg Interactive Brokers studio. This is Business Week.
It's 3:21 on Wall Street. I'm Amy Morris. South Korea's President Yoon says he will lift his martial law decree just hours after his dramatic move imposing it. The won took a hit when he imposed martial law. It's now 1.7% lower, trading at 14.28 against the dollar. France's President Emmanuel Macron says he does not believe Marine Le Pen will join a left-wing coalition that would topple the French government, adding that he will not resign before his mandate ends in 2027. French lawmakers will hold a no-confidence vote against Prime Minister Michel Barnier tomorrow. The euro is 0.1% higher, trading at 105 against the dollar. We do check markets for you all day long at Bloomberg. The S&P 500 is little changed on the upside. NASDAQ is up 0.2% and the Dow is down 0.1%. The Russell 2000 index down 0.7%. The 10-year Treasury yield at 4.22% and the 2-year yield at 4.16%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris, and that's a Bloomberg Business Flash. We return you now to Bloomberg Business Week with Carol Masser and Tim Stenivek.
Amy, thanks so much for that update.
You're a little, crotchety today, huh?
Are you talking to Amy?
No.
Rude.
Not Amy.
Oh, you're talking to me.
Amy's wonderful.
Yeah, I know. You're talking to me. I'm just trying to deflect. Hey, a lot of Fed speakers.
I know.
Doing what they do. I'm not even going to go. I have them all written down.
There was a time where I felt like Fed speakers didn't talk, and it was kind of sweet.
Since I wrote this
Sorry, Fed speakers.
Since I wrote this, an hour ago, we've heard from more Fed speakers.
I know. It's a Fedapalooza.
Okay, 3 Fed officials also spoke on Monday.
Yeah.
I'll go with Mary Daly earlier today, said an interest rate cut this month isn't certain, remains on the table for policymakers. In addition to all the Fed speakers, we got an October JOLTS figure that surprised to the upside. More labor market data coming later this week. Stuart Paul follows it all. He's Bloomberg Economics' economist.
Is Mary Daly data dependent?
Yeah, she is.
Okay,
she
just
is.
checking.
I think Stuart Paul is too. He joins us here in the Bloomberg
We know he
Interactive
is.
Brokers studio. What's more important this week? Is it what we hear from these Federal Reserve officials, which doesn't seem to be that different based on who you hear from, or is it what we get on Friday with that labor report?
To Carol's point, there was a point in time when Fed speakers didn't say much.
Right?
There was very little Fed speak. Now Fed speakers talk a lot, but somehow they still don't say very much. The best signal that we've gotten so far actually came from Chris Waller, one of the governors on the Board of Governors, who very clearly stated that his base case is for another rate cut in December, but he firmly left the door open to skip the meeting. Now, that's not a huge shocker, though, because we saw in the summary of economic projections that we got in September that, yes, the median participant on the Federal Open Markets Committee expected that rate cut in December. Of course, it's that base case. So the thing that matters is really what data is going to surprise before the Fed meeting that could perhaps result in a pause.
This is like, with your spouse, you're like, yeah, we'll see. We'll see. We'll see.
What do you mean?
You ask something and, the Fed officials, we'll see. We'll see what the data says. We'll see when we meet, right?
Yeah, we'll see if we could work that vacation into the schedule. We'll see if we could get you a new car next year.
Exactly.
Data dependent.
We'll see if we can do that new kitchen. We'll see. So how do you game it out? Game out is it's my new catchphrase because I feel like we have to game out so much. A new White House, geopolitics, what the Fed's going to do. We're just trying to kind of, figure it out.
Here's how I game it out, based on what I think the Fed members do. I think that they work from their base case, which was for another 25 basis point cut in December. Think back over the data that we've got during the intermeeting period, which showed disinflation progress really stalling out. And so maybe rates aren't as restrictive as they expected they would be, and they aren't acting on the economy as strongly as those Fed members anticipated. We did get a dismal jobs report for the October data, but we have the November print coming up, and we're probably going to see some rebound hiring, especially in the most strike-affected industry, aircraft manufacturing. So that should add about 40,000 jobs.
Retail hiring, or should we assume that that's a factor, or has that already been done?
Most of that was likely done, and there is a big seasonal adjustment factor that's going to come into play there. I think that retail is mostly done, but I am expecting to see about 175,000 jobs added in the November print, which is a bit higher than the 3 and 6 month moving averages that we saw even before we got that dismal 12,000 job print in October.
Why is it all because of the holidays? Is it all because of the strikes being over? Is it because now people know who the president is going to be and we're not in this long drawn out process that's gone to the courts?
It's mostly a matter of strikes being resolved. So it's mostly a matter of strikes being resolved. It's a little bit of rebound hiring in some of the hurricane-affected industries, though probably not that much. And then you just have to take into account the systematic error that we have in some of the BLS estimation processes, which tends to inflate non-farm payrolls numbers, and which we know the FOMC sort of mentally adjusts for based on some of the Fed speak.
So things aren't as bad as they looked in October?
Things aren't going to be as bad as they looked in October, pretty confident in that, but we're still very likely to see some of the more cyclically sensitive industries, some of those industries like, say, professional and business services, where maybe you'd hire support staff in boom years, we'd still expect to see some of those more cyclically sensitive industries shedding a few jobs.
All right. Jay Powell speaking. Tomorrow. What's the thing that we should all be like, like a dog?
Is he gonna have will he have a folder with him where he'll start hearing a question, then he'll turn to a page?
So he does tend to be a folder guy. He's a big folder guy. He's also a big iPad guy. Wouldn't be surprised to see the iPad come out tomorrow. What would I expect to hear from Jay Powell?
What are you listening for that might be like, oh, that's interesting?
See, I go deep into the weeds, and I'm a bit of a technical nerd, so I like hearing about the technical adjustments on the overnight reverse repo rates. But really what we want to hear about...
Sorry, what did you say, Stuart?
the widening of the spread between interest on excess reserves and the overnight reverse repo rate.
Okay, we do love you for that, but can you get a little bit more
so what is it that would really set off alarm bells and send signals, rippling through the market, would be any sort of indication as to whether we can see either a very hawkish cut. So is he saying anything about what he expects the neutral rate to be, how restrictive monetary policy is right now? If he says monetary policy is still very restrictive, then we're going to be expecting that December cut still. If he says, well, inflation progress is stalling out, then he's sort of in that Waller camp, firmly keeping the door open to a pause in December.
I think there are going to be some questions about politics, even though he sort of tried to put that to rest at last month's Fed meeting.
Yeah.
You know that they're going there.
Is that when the folder gets opened or the folder gets shut?
Or it's like a quick no, I will stay in my job, I will not resign.
That's the attitude that he took during the previous press conference for the November FOMC meeting. But one thing that we do know is that staff at the Federal Reserve do offer their forecasts for the data, and they do offer alternative outlook scenarios, and they do have the option to say, consider fiscal policy and to consider tax policy. They take all of that into consideration in the alternative scenarios that they feed to members, who then craft their forecast based on the data that they're given by staffers.
Do we get a new summary of economic projections?
In December.
We do get it. So
December meeting.
So it's a big drop. It's a big drop. Okay.
And we'll be looking at that long-term
We appreciate the
dot.
wonkiness, but thanks for going more mainstream. We really appreciate it. Stuart Paul, U.S. economist at Bloomberg Economics, will be watching out for all of his analysis of Jay Powell and more throughout the week.
Okay, so let's look at the macro, what to expect when it comes to that payrolls report later this week, what we're going to hear perhaps from Jay Powell tomorrow. What's happening, though, when it comes to trading in the wake of the election and the revenge of trader bros, these speculative bets that are booming in Trump's America? We're talking Bitcoin, talking Trump's tiny social media company, penny stocks. They've surged all in the wake of that victory. Bailey Lipschultz and Vildana Heinrich write about it for Bloomberg Markets. Bailey is Bloomberg News Equities reporter. He joins us here in the Bloomberg Interactive Brokers studio. So a lot of people who were in the crypto world, and they were pretty active like in 2020, kind of went a little quiet during the crypto winter, are doing kind of a victory lap right now. What did you find?
It's a big win, Tim. When you go back to 2022 even, when FTX was everywhere and no one knew what was going on with Binance, radio, TV, print, crypto's dead, it's dying, things are over, congrats, it was a really fun flash in the pan. Now Bitcoin's north of $95,000, and crypto showed that they can go out and win elections and have a big role in not only the presidential election, but a number of big seats across Congress.
All it takes is a couple $100 million and ads about border policy and the economy, and not mentioning crypto at all. Sorry.
Yeah.
Just a little context for
Context.
the lobby.
Context matters.
That was that they were doing. I mean, it was a lot of it.
But it's having another moment, and the tech bro, whether that's on X or whether that's just in other kind of forms of communicating, they're having a moment in vindication, whether you're looking at XRP, whether you're looking at Bitcoin, or to your point, some of these random things, whether you're trading Peanut the Squirrel, ticker PNUT.
What?
On
Well,
crypto.
isn't everybody trading Peanut the Squirrel?
It's got a $1.2 billion market cap, and it's just because of memes.
I mean, come on. I mean, I understand a little bit on crypto that they might, that Washington might, the powers that be, the new administration and others will kind of have their back. But there's also the stuff you hear on a campaign trail and then the reality of actually getting either the regulatory support, right? I mean, there are many steps to go. And I just wonder how much of this is getting ahead of itself.
And that's the big discussion, whether part of the rush that we saw early this year with Bitcoin was directly tied to these ETFs, and whether that was kind of opening the floodgates for institutional money, or to your point, Carol, right now when you look at Bitcoin before the election was trading $69,000.
I mean, there was one day on, I'm sure a lot of us were doing it on X, it's, 89 or 88, 89, 90. It just it felt like every couple of hours, it just kept going up, or every couple of days, or every day post-election. So I do wonder about that. Isn't it? It's actually Peanut the cowboy outfit wearing.
Peanut the cowboy outfit wearing.
Pet squirrel.
Pet squirrel that was euthanized
Is that the
in
one
New York State.
I was going to say, that's R.I.P. to a
Became
legend.
MAGA martyr. It was... The internet is weird. That's all I will say.
Wait, what? So, I don't know. This is great and fun reporting, but I do wonder, listen, we lived through the meme stocks, right, coming through the pandemic. I mean, some of this, real money was made, right?
Real money was waiting. And even when you look at the cozying up between Elon Musk and Donald Trump, you look at Tesla going from about $250 a share to just a few days ago north of $350. You look at the valuation in the private markets that is being ascribed to SpaceX.
We talked about this with Max Chapkin earlier.
It's a huge deal, and it does have ramifications, whether you're trading MicroStrategy or the levered ETF because you're a fan of Michael Saylor and Bitcoin. A lot of money is being made, but a lot of money can be lost, and based on some
it moves
of the
around
peaks we've
quickly,
seen.
right?
Exactly.
Yeah. But
where does it go from here?
In what sense?
It seems like what's been priced in here is a lot, especially on the crypto side. Yeah. And if the president-elect doesn't deliver, I wonder if there's going to be pain there.
I think that there will. When you have conversations like Vildana and I had with some of the retail investors who are talking up Bitcoin, they're talking up MicroStrategy, and their thesis is strictly cemented around a strategic reserve. And if that comes to fruition, what that could mean, there's a lot of hopium on social media, and there's a lot of hopium in these conversations, but reality matters.
I love that, though, as you guys point out, we've just got to wrap up here.
Today's
But
deep dive.
Wall Street's watching, right? Whether it's leveraged products that they start offering up, leveraged ETFs. I mean, they understand that people are playing with this stuff.
They make money off of trading.
Yeah, ultimately. You want to see this squirrel?
You're looking for the squirrel?
I'm going to look at it.
It's dead, Carol.
Oh, big.
See what you come in here, Bailey. You just shattered
It's kind of
dreams.
cute, though.
It is
I
kinda
mean,
cute.
it was cute. I don't know. It's
Rest
not
in
a
peace.
thing anymore.
Our hearts go out to their friends and families.
R.I.P. Hey, Bailey Lipschultz, check out the story. Bloomberg Markets, Bailey and Vildana. This is Business Week.
Let's talk about AI, because like you were on this tip 10 years ago when nobody else was. And I always thought he's right. Why? Because I've seen too many movies. Everything that happens in movies that happens in real life. And if you make things that are way smarter than you, why wouldn't they become your overlords? So what did you say to Chuck Schumer, and what are we doing about this? I know you want to pause in AI because just in the last 6 months with ChatGPT, which came from a company you started.
Yes.
Well, I mean, a friend of mine has a sort of modification of Occam's razor. So instead of the simplest thing being the most likely, the most ironic outcome is the most likely.
Right. Right. Yes.
So, with respect to AI, I just think we should have some sort of regulatory oversight. So, for anything that is a danger to the public, if it's sort of aircraft, cars, food and drug and whatnot, we've got some regulatory oversight, like a referee, essentially, and making sure that companies don't cut corners. So I think that if one agrees that AI is a potential risk to the public, then there should be some regulatory body that oversees what companies are doing so that they don't cut corners and potentially do something very dangerous. That's...
Oh, yeah.
Y Combinator. Arguably like the world's most prestigious startup accelerator seems to be backing companies that are like surprisingly similar.
Oh, wow.
Yeah. We were intrigued when we came across this analysis by DeckMatch.
DeckMatch.
A startup product data company. And trust me, this isn't just about Silicon Valley drama. This gets at the core of how investors are thinking about the future of innovation.
Oh, that's really interesting. Yeah, it all blew up with the Pure AI controversy. Remember all that? Pure AI, a code editor, gets into YC, and almost immediately, people are saying it's a clone of another YC-backed code editor.
The internet was on fire.
Oh, yeah.
Some people were slamming YC, saying they were fostering unhealthy competition.
Right.
I think Gary Tan, YC CEO, jumps in, defending Pure AI, talking about how competition actually gives users more choice.
It was fascinating to see that debate play out. Ultimately, Pure AI ended up rebuilding their product from scratch. But what I find really interesting is YC's official statement on all of this.
What did they say?
They basically said, look, we're focused on founders, not specific ideas.
Wait, hold on. So they're saying they're more interested in the people behind the startup than whether the idea is like completely original. Isn't that kind of counterintuitive? Especially for a place like YC that's supposed to be at the forefront of innovation.
Right. You'd think they'd be all about the next big thing, the totally unique concept. But their logic, and it's reflected in their request for startups process.
Request for startups.
Is that even in crowded markets, the right team can completely change the game.
Okay. So for those of us who haven't gone through the YC ringer, what exactly is this request for startups process?
Essentially, it's YC's application process, and it's notoriously tough. They get thousands of applications from startups all over the world, and they only accept a tiny percentage. And what they're really looking for in that process is the team, their vision, their resilience, their ability to execute. The idea itself is important, of course, but it's not the only thing that matters.
Interesting. So it's less about, have you invented the next Facebook?
Yeah.
And more about, do you have the grit to make any idea work?
Exactly. YC's philosophy seems to be bet on the jockey, not the horse.
Interesting.
But of course, not everyone buys into this approach. Brian Onell, who founded the security startup OneLead, is a YC alum himself, and he was pretty vocal about his concerns. He argued that fostering this kind of direct competition within the YC network was actually harmful to the startups involved.
So on one hand, you have the tight-knit YC network, a huge advantage for any startup.
Yeah.
And on the other, it potentially becomes this pressure cooker where everyone's stepping on each other's toes.
Yeah.
It's a tricky situation for sure.
It really is. And then you have someone like Nick Evans, the founder of Tile, which was acquired, and now he runs Avocado, a restaurant point-of-sale system. Both companies went through YC.
Okay.
And he actually embraces competition, even within the YC network. He has this great quote, "Startups don't die by murder, they die by suicide."
Wow, that's powerful.
Yeah.
He's basically saying, you're focused on your competition, you're already losing.
Uh-huh.
But how does he justify that stance?
Well, he argues that having multiple companies in the same space, all supported by investors who really understand that industry actually leads to better outcomes for everyone. The investors can share insights, connect startups with the right resources, and really help them navigate the challenges of that specific market.
So it's almost like having a bunch of really smart, experienced coaches in your corner, all pushing you to be your best.
Mm-hmm.
I can see how that would be valuable, even if it means going head-to-head with your classmates.
And that's exactly where DeckMatch, the company behind the analysis that sparked this whole deep dive, comes in. They were intrigued by the Pure AI situation, and as a data company, they actually just raised a big funding round themselves.
Congratulations.
Thank you. They decided to dig into YC's portfolio. They wanted to see just how often YC backs companies in similar spaces.
So their mission is to provide data-driven insights. But this specific analysis was sparked by this very public controversy. I love how a good drama can sometimes lead to some really interesting research.
Right.
Okay, so DeckMatch goes on this data deep dive into the world of YC companies. What do they find? What categories are we talking about here?
They identified several categories where YC has a surprisingly large number of companies competing in the same or very similar markets. And remember, these are all companies that went through YC's rigorous selection process. So it's not like they're just letting anyone in.
So lay it on me. What are some of these categories?
Well, we've already talked about AI code editors with Continue and Pure AI.
Right.
But there are others, Void Easy Code Ellipsis, all YC companies, all going after the same basic market. Then you have the world of food, beverage, and restaurant point-of-sale systems. Between 2020 and 2023, YC funded companies like Avocado Drupos and Polo, which is focused on the Latin American market.
So even within that one category, you have companies targeting slightly different niches, but still competing in the same broad industry. That's really interesting. And I'm guessing AI is a big one.
Right. Oh, absolutely. AI is everywhere, and YC is definitely on board with that trend. I've got companies like Apton Persona AI and Topo, all focused on AI-powered sales and CRM. Then there's the world of AI meeting assistants with companies like Circle Back Onward, Sonnet, and Spinach AI.
Wow.
And let's not forget about the AI legal assistants with companies like Dioptra, Leia, and Tower. It seems like every aspect of our work lives is getting the AI treatment.
It's mind-boggling how many AI applications are popping up. But what's really interesting to me is that YC isn't just blindly following trends. They're also aware of when a market is becoming too crowded or when a particular technology is losing its luster.
Right. They're not just backing any AI company that walks through the door. They're being strategic about it. For example, crypto trading platforms were all the rage a few years ago, especially after the success of Coinbase, another YC alum. But given the recent downturn in the crypto market, we've seen far fewer YC entrants in that space lately.
Makes total sense. They're adapting to the market, not trying to force a trend that's fizzling out. So what other areas have fallen out of favor with YC?
Well, e-commerce store platforms were another popular category for a while, but that market has matured quite a bit with giants like Shopify dominating the landscape. We've seen fewer YC companies focusing on that recently, perhaps because they see less room for disruption there.
So they're recognizing that certain markets are already pretty saturated, and it might be more difficult for a new startup to gain traction there.
Right.
What else is on the not hot anymore list?
Corporate expense cards. There was a wave of those a few years ago, especially after the rise of Brex, another YC success story. But that area has also seen fewer YC entrants recently, possibly because the market is becoming more competitive and the barriers to entry are higher.
It's fascinating to see how closely YC's investment decisions align with broader market trends. They're clearly not just looking for innovative ideas. They're looking for ideas that are ripe for success in the current market.
Absolutely. They're not just about disruption for disruption's sake. They're about identifying opportunities where startups have a real chance to make an impact.
So we've seen how YC seems comfortable backing multiple companies in similar spaces, even if it goes against our initial intuition about what a top accelerator should be doing. And they're clearly paying close attention to market trends when making those decisions. But what does it all mean? What are the implications of this approach? This is where it gets really interesting, right?
Well, on the one hand, you could argue that this approach, fostering competition within a carefully curated network like YC, actually leads to faster innovation. It creates this pressure cooker environment where startups are constantly pushing each other to be better, to iterate faster, to come up with new features and solutions.
So it's like a high-stakes game of leapfrog where everyone's trying to outdo each other.
Yeah.
And that can benefit not only the startups themselves, but the entire industry, right?
Exactly. You get more diverse solutions, faster development cycles, and ultimately a more dynamic market. Plus, having multiple companies tackling the same problem can lead to a deeper understanding of the challenges and opportunities in that space.
So it's not just about who wins the race, it's about pushing the boundaries of what's possible. But isn't there a risk that this approach could stifle truly unique ideas?
That's a really good point, and it's a valid concern. If investors are all flocking to similar concepts, it could discourage founders from pursuing more unconventional paths. Why take a risk on something completely new when you could get funding for something that's already proven to be hot?
Right. And if everyone is focused on incremental improvements within existing categories, we might miss out on the next big breakthrough, the truly disruptive innovation that comes out of left field.
It's a balancing act for sure. How do you encourage healthy competition and rapid iteration without stifling creativity and originality?
That's the million-dollar question, isn't it? And it's something that we as observers of the tech landscape need to be thinking about.
Absolutely, because the decisions that investors and accelerators like YC make today will have a ripple effect throughout the entire tech ecosystem for years to come.
So what does this mean for someone who's out there right now working on their startup idea, dreaming of getting into YC or securing funding from a top-tier investor? Well, what's the takeaway for them?
I think the takeaway is that while having a unique idea is still valuable, it's not the only thing that matters. YC's approach shows that investors are increasingly focused on the team, their execution abilities, and their understanding of the market.
So even if you're working in a crowded space, if you have a strong team, a clear vision, and the ability to execute, you can still attract attention and succeed.
Exactly. And remember, competition can be a good thing. It can push you to be better, to innovate faster, and to ultimately create a more valuable product.
It's all about playing the game strategically, knowing the rules, and being prepared to adapt and evolve. But before you get too caught up in the strategic side of things, I think it's important to acknowledge the human element here.
Absolutely. At the end of the day, startups are built by people. And those people are driven by a complex mix of motivations, ambitions, and fears.
Right. And competition, whether we like it or not, is deeply ingrained in our human nature. We're constantly comparing ourselves to others, striving to be the best to win, to stand out from the crowd.
And I think YC, perhaps unconsciously, is tapping into that primal instinct. By creating an environment where startups are constantly challenged and compared to each other, they're essentially harnessing that competitive drive to accelerate innovation.
That's a fascinating insight. It's like they've created this high-stakes, high-pressure game, and the players are responding in kind. But where does that leave us as a society? As we embrace this idea of competition as a catalyst for progress, are we inadvertently creating a world where only the most ruthless and ambitious survive?
That's a really important question, and it's one that we need to grapple with as we continue to navigate this rapidly evolving technological landscape.
It's a reminder that progress is not always linear, and that every step forward comes with new challenges and responsibilities.
Well said. And as we continue to explore the frontiers of technology, we must do so with both a sense of wonder and a healthy dose of caution.
This has been a truly thought-provoking deep dive into the world of Y Combinator and its unique approach to fostering innovation. But before we wrap up this first part of our conversation, I want to leave you with one final thought to ponder.
Go for it.
We've seen how YC embraces competition as a catalyst for progress. But in a world where artificial intelligence is rapidly advancing, could this approach actually accelerate the development of AI in ways that we might not fully anticipate?
That's a fascinating question and one that we'll need to grapple with as AI continues to evolve.
If AI systems are constantly competing and learning from each other, could they potentially reach a level of sophistication and autonomy that surpasses our expectations or even our control?
It's a possibility that we need to consider seriously. As we embrace competition as a driver of innovation, we need to be mindful of the potential consequences, especially in the realm of artificial intelligence.
It's a reminder that progress is not always linear and that every step forward comes with new challenges and responsibilities. But we'll delve deeper into that question in our next segment. Stay tuned.
You know,
to recognize that other players are going to be the ultimate beneficiaries of that AI trade. So while we still definitely do love tech, we also are a fan of diversifying outside of there because a lot of those names are really going to benefit as well.
I want an ETF named after me.
You can do it.
Hey,
you can do it.
Fun. I recommend it.
That ETF, by the way, up 19, almost 20% this year. Alexis Brown Roberts, thank you so much. This is Bloomberg.
listening to Bloomberg Business Week with Carol Messer and Tim Stenbeck on Bloomberg Radio and Television.
All right, everybody, just about 7 minutes away from the closing bell on this Tuesday afternoon. And then stick around, because once we're done with the simulcast, we're going to have another simulcast courtesy of our Caroline Hyde. She's co-host of Bloomberg Technology. She's going to be catching up with the AWS CEO, Amazon Web Services CEO, Matt Garman. So great interview. We'll look forward to that one. We'll be carrying that in just a moment.
Wow.
What?
I'm looking at the most read stories on the Bloomberg terminal in the last hour.
That's my cue to go there. And?
This one I did not see coming.
Okay,
the most read, Josh Idelson, who covers labor here at Bloomberg News. A Biden administration appointee has agreed to lock in hybrid work protections for tens of thousands of Social Security staff, part of a slew of organized labor efforts that complicate President-elect Donald Trump's efforts to reshape the federal workforce.
Oh my God, the American Federation of Government Employees, a union representing about 42,000 Social Security Administration workers, reached an agreement with the agency last week that will protect telework until 2029 in an updated contract, according to a message to its members viewed by Bloomberg. The new deal, signed by President Biden's just departed SSA Commissioner Martin O'Malley, will let workers, quote, maintain current levels of telework, according to the AFG or AFG chapter president Rich Couture writing it out.
Okay, the context here is DOGE, the Department of Government Efficiency, because Trump has asked billionaire Elon Musk and entrepreneur Vivek Ramaswamy to lead a task force aimed at cutting government spending. Musk and Ramaswamy have said that they plan to cull the federal workforce and eliminate work-from-home policies. They wrote in a Wall Street Journal op-ed last month, quote, requiring federal employees to come to the office 5 days a week would result in a wave of voluntary terminations that we welcome.
It's interesting. Just reading some of the reporting done by our team, collective bargaining agreements may not deter the president-elect, who will, of course, be president come January, Elon Musk or Ramaswamy, who have signaled they plan to challenge precedents limiting executive authority. But reneging on a contract could lead to protracted legal disputes as well as protests and pushback from lawmakers. It would certainly, right, if it's in effect and all of a sudden you pull it, like the visual on that potentially and the media cycles around it would be a lot.
Yeah. Hey, I just wanted to remind everybody about where the money goes that the government spends. It tends to be healthcare and like Social Security, so Medicare, Social Security.
Yeah.
Defense. And a relatively small portion has to go to paying salaries of government workers. I'm not saying it's a small number, but relative to the close to $7 trillion that the U.S. government spends each year. No, it's not the people.
Yeah.
So it's like, you know, people quitting because they're working from home is kind of a drop in the bucket when it comes to the budget. So if you're trying to cut a couple $1 trillion, getting rid of, you know, employees is not going to help that much.
I think it's going to be more like government contracts. Right? Like spending, if you think about where the spending
Government
goes.
contracts to SpaceX?
Or just potentially, or elsewhere. But then I also think about how that, you know, contracts that help companies in certain states and citizens, and that becomes quite the political football. It's like,
exactly.
Don't cut the programs in my states. Farmers, like, you pick your sector, right? Pharmaceutical, like whatever.
There have been presidents who've tried to do this in the
messy.
past. And it's not easy.
I'm not saying that, you know, we all could be more efficient, except for Tim and me. We are totally efficient buddies.
She's being sarcastic here.
Am I?
Yeah.
Am I really?
I mean, we get the job done.
We do get the job done. No, but I'm saying everybody.
We got a great team to help us get the job done.
We can all find more efficient ways of doing things. So might there be some government bloat? But sometimes governments are done that way to like keep things in check, right? So that nothing drastically dangerous gets done.
Do you think Americans think that Congress is efficient in their use of time? Why are you so quiet?
I don't know. I think about this a lot, right? We pay their salaries. They work for us. And yet sometimes it feels like that is lost in the discussion.
I'm just wondering.
I don't know. Maybe we'll put that out. If you have some thoughts, feel free. If you're on the Bloomberg, if you're on X, tell us what you think.
We're not working from home.
No telework here.
No.
We are in the office big time. All right, everybody, just a few minutes to go. Right now, over to our TV colleagues. Let's cast the closing bell, starting right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here along with Alex Steele, taking you through the closing bell. A global simulcast starts right now, Carol Massar. I don't know. I'm not sure. I'm never sure about anything, Carol Massar. What I am sure about here is that Scarlett Fu joins us in the TV studio as she does every day at this time. Tim Senovic joins us in the radio booth every day at this time. Carol Massar, it's always a wild card whether she's going to be here or not, but we still welcome our audiences across all of our Bloomberg platforms here on a record day for the S&P and the NASDAQ.
Unbelievable. It feels like it's been a painful trade, right? Like, I don't know. I want to hear what Jay Powell has to say tomorrow. I want to see what the jobs report. We're kind of getting back to some of the fundamentals and policy. That's kind of what I'm looking forward to at this point.
That's kind of all there is now that earnings are, we're kind of done with earnings. I don't want to say we're completely done because we never are.
Today, yeah.
We do. We talked to Stuart Paul, who's a lot more optimistic about the October and about the November labor numbers than payroll numbers than we saw in October because of the strikes being over, people being rehired after the hurricane. He's thinking 175,000 people.
Well, we'll see, because, of course, October was pretty messy because of all the weather events. I don't know about you guys, but I was fascinated by the drama that took place in South Korea, where there was martial law for almost 6 hours until they lifted it. And that kind of sets us up for tomorrow, where there's going to be drama in France, too.
Yeah, and sort of how do you wind up pricing that, right? Like, you could some of the iShares ETFs that track South Korean equities, you definitely saw them low, but they're closing well off the lows of the session as we're looking at, again, record highs for the S&P 55, if you're keeping count, and the NASDAQ 100.
And it raises the whole question here about why you're not seeing a little bit more downside hedging here in the U.S. And really, we should point out globally, because when we talk about the record highs, a potential 55th record high here on the S&P 500, you have the MSCI All-World Index also closing at a record high today, of course, propelled in big part by U.S. exceptionalism, a big part by the Mag 7, 60, 49, and change. It takes a while for these numbers to settle. The S&P 500 is now up a fraction of 0.1% on the day, but that is going to be good enough for a record high should that hold. The NASDAQ also at a record high, up about 77 points or 0.4%. The Dow Jones and the Russell sitting this one out. The Dow Jones Industrial Average down about 0.2%, while the Russell 2000 closing out the day down 0.7%.
All right, and if you go deeper into the S&P 500, you can see that most names in the index actually lower in today's session. Looking forward to seeing the IMAP. But, Scarlett, we've got about 348 names in the S&P 500, lower today, 153 to the upside.
Yeah, 8 out of 11 sectors in the red: utilities, financials, and industrials leading the declines. The 3 sectors that are in the green are, the techie sectors: communication services, tech itself, and consumer discretionary.
All right, so let's get to some of the individual gainers, guys. First of all, old time, AT&T. This name was among your top gainers.
Sorry, can I just interrupt you?
Yes,
expecting
please.
Earnings out of Salesforce. Those numbers now just crossing the wire as we speak. Let's get right to it. Sales in the most recent quarter, it looks like a beat, $2.12 billion. The street was looking for 2.06. Services revenue also a beat at $2.29 billion. Overall revenue coming in at about 9.44. That's also a beat here. Not quite seeing the EPS numbers just yet here, but at least on the top line certainly looks like a beat, guys. Here's your forecast, your fourth quarter revenue forecast. The company providing a range of $9.9 to $10.1 billion. Street was looking for roughly about 10.1, so the top end of that range pretty much in line with the average of Street estimates.
All right, little movement to the downside on Salesforce, just down about 1%. Check this one out. Let's bring up the aftermarket and Okta, because it is soaring in the aftermarket. This is the mobile identification, security, multi-factor authentication company coming out with its numbers. Let's go right to the outlook. Fourth quarter revenue, they're looking at $667 million to $669 million. That's above the Street estimate of $650.7 million. Fourth quarter adjusted EPS, they're looking for a range of 73 to 74. Not really quite a range, but well above the estimate, which is 67 cents on the Street. And again, they're looking for fiscal year revenue of $2.6 billion. They had seen 2.56 to 2.57, so upping that up just a little bit. And that stock up 17% in the aftermarket. It had been down about 10% here in 2024. But if that holds into tomorrow's session, we'll see that stock move into positive territory for 2024.
Well, quite a move from Okta right now, higher by 16%. Salesforce not moving much. I'm just looking through the press release right now to get some commentary from Mark Benioff, Chair and CEO over at Salesforce, talking, of course, about AI and Agentforce, the complete AI system for enterprises that is built into the Salesforce platform. He says that Quote, the rise of autonomous AI agents is revolutionizing global labor, reshaping how industries operate and scale. And with Agent Force, we're not just witnessing the future, we're leading it, unleashing a new era of digital labor for every business and every industry. That's a quote from Mark Benioff in the press release. I'm still waiting to see what that actually looks like and how companies are able to save money and become more efficient with use of AI. I think a lot of investors are as well. Salesforce right now, up about 0.7%.
And we have a little more detail on Salesforce's outlook, too. Fourth quarter adjusted EPS will be $2.57 to $2.62. That is lower than the consensus estimate of $2.65. And of course, this is a stock that has climbed 27% since its last quarterly earnings. So it's got quite a bit priced into it on that excitement over those AI agents. We also have some headlines on Campbell's, the soup company, or the once upon a time just soup company. It has boosted its quarterly dividend by about 5%, and it also reported results. First quarter adjusted EPS 89 cents, beating the consensus estimate by 2 cents. Net sales $2.77 billion does fall short of the analyst estimate of $2.8 billion. For the full year, it sees net sales of 9% to 11%, which looks to be a maintenance, reiterating its forecast for what it saw for full year sales.
All right, we're also waiting for Marvell Technologies. That should come out any moment as well. Again, looking at the AI read-through from there. Going back to Salesforce for a moment, because I wanted to look at that forecast in terms of the fourth quarter. It's looking at revenue estimates anywhere from 9.9 to 10.10 billion. That looks like a beat from what current estimates were. Adjusted earnings estimate coming in at $2.57 to $2.62. That's a little bit lighter than what's estimated, but that stock now reflecting that upside over 4% and 3%, because a lot of these numbers look super, super solid.
And it's kind of interesting, too, when you talk about the contribution from AI on the total revenue stack, and they don't really sort of explicitly break that down, but you can see that sort of reflected in the subscription and support revenue. Definitely a little bit of a boost, and you talk about this whole, AI, agent thing that they're trying to roll out here. And this general idea that when we look at sort of the big upswing that we've seen in AI-related stock, it has been confined to chip makers like NVIDIA. It's been confined to cloud computing companies like Microsoft. The big question is this the time now where investors embrace the software side of this story?
All right, guys, Marvell Technology also out with its earnings. Third quarter adjusted EPS, 43 cents. That's 2 pennies better than the street was expecting. Third quarter loss per share, 78 cents versus a loss share year over year of 19 cents. So we'll look for some clarity around that. Marvell Technology up 7%. So investors seem to like what they're hearing initially on these brief headlines. Third quarter net revenue, $1.52 billion. That too was better than what the street was forecasting. The street was looking for about $1.45 billion. And here's something into the outlook. Marvell Technology sees fourth quarter adjusted EPS of 54 to 64 cents. And folks, that's above the street estimate of 52 cents. So yeah, that stock's up 10% here in the aftermarket.
Matt Murphy, the chairman and CEO of Marvell, saying that the exceptional performance in the third quarter is primarily driven by our custom AI silicon programs, which are now in volume production, further augmented by robust ongoing demand from cloud customers for our market-leading interconnect products. I bring up his name because he's one of the names that could potentially be a new CEO over at Intel. Our Bloomberg News team reporting a little earlier today that the search for a new Intel CEO is focusing on outsiders. And Matt Murphy over at Marvell, one of the names that is being floated. Shares up 10% now.
And of course, investors continue to search for opportunities in the AI and in the tech space. And of course, that includes names like Amazon. Amazon Web Services right now is hosting its annual reInvent conference this week to discuss their latest innovations. And the AWS CEO, I'm pleased to say, he actually joins us right now. Bloomberg Technology co-host Caroline Hyde standing by. Caroline, take it away.
It is a joy to be joined by Matt. Thank you, Romain. Matt, welcome from Las Vegas. reInvent upon you. Chip ultra clusters, ultra servers, chip development, LLM. Then we've got talk about developer tools. There's a lot to get through. Let's start with the ultra cluster. Can you just talk to us a little bit about this more than 100,000 chips that will be put in one single area for AI hardware? Why do it? What will it offer?
Yeah, this is something that we're building together with our partners at Anthropic, and it's actually going to be several 100,000 chips. And they're focused on, and it's our new Trainium 2 chips. And so we expect that this should deliver them 5 times more compute than they've used in their last model training. And so we're really excited about what they're able to accomplish. And they're expecting to build much bigger and much more capable AI models from that large compute cluster.
Do we have a US location? Do we have an exact time frame other than early 2025?
No location to share with.
Matt, what then of the technical challenges? Paint the picture for our audience, how difficult this is in terms of cooling, in terms of energy use. What has been the things that you have to overcome with this?
Yeah, well, the first core innovation is that we built our own chip, actually. And so we've built our own chip. It's called Trainium 2. And we're quite excited about the performance that we get out of that. And that's combined all in these really large ultra clusters that combine 64 Trainium chips, all to deliver 83 petaflops from a single node. And so that is the first innovation, is our Amazon-designed custom silicon that gives us really unparalleled performance for generative AI capabilities. And then we build these together with high-performance networking that we also build in-house. And then, of course, there'll be cooling and heating and power that we need to go build the data centers. But it really starts with that silicon down at the level, and we innovate on the entire stack of AI to make sure that we can control everything that goes into those clusters.
Can you talk to us a little bit, compare and contrast here? This is about less dependency on NVIDIA GPUs to many ways, doing an alternative for your clients. What sort of cost saving will clients get? What sort of energy and efficiency will they get?
Yeah, well, first of all, I think we like to think of it as a supplement to NVIDIA GPUs. NVIDIA has a fantastic product. That team has done an outstanding job executing. And we think that the vast majority of workloads are going to continue to run in NVIDIA processors for a long time. But customers want choice, and they want choice that can give them some lower cost options. And we think that for certain workloads, for many workloads, Trainium 2 can give customers 30 to 40% cost performance benefits over today's GPU-powered instances. And so we think that that's a huge win for customers, particularly as they're looking to lower the cost of generative AI workloads. But we'll be great partners with NVIDIA and continue to lean in on building great technologies together with them for a long time.
Trainium 2 available, Trainium 3 in the works, and all of this is, as NVIDIA at the moment is estimated, has about 95% market share. Do you agree with that sort of number they have, and what sort of area do you think that will come down to?
Yeah, I mean, I think it's probably higher than that. I think the vast majority of workloads in generative AI today run on NVIDIA technology, and they've absolutely been the leaders in that space. But we do think we hear from customers that they want choice. And just with our processors, where we're tight partners with Intel and with AMD, but we decided to go build a general purpose processor called Graviton, and it's been hugely successful with our customers. But we also provide lots of Intel and lots of AMD processors in our cloud today, and those businesses continue to grow. So I expect that our usage of NVIDIA will continue to grow from our customers, and that choice is really going to be powerful. And as you see this explosion of generative AI usage, I think there's going to be plenty of business for multiple different people to be successful.
A key partner is Intel. How concerned have you been about the change at the top?
Oh, it's okay. I wish Pat the best. I know Pat, and he's been a good partner of ours, but we've been partners with Intel for a long time. It's been 18 years. Since we launched our first Intel instance when AWS and EC2 first launched. And we'll continue to be great partners with Intel, and they have a great technology team there. And we look forward to continuing to roll out the latest technologies from Intel for our customers to be able to use.
And you've been continuing to roll out, as you say, NVIDIA offerings. Last time you were on, we were talking about Blackwell, of course. Many have been frustrated, perhaps by some slowness to market there. When do you anticipate that Blackwell will be unfolding, and how difficult has it been to ensure the supply side is there?
Well, they've obviously had some manufacturing things that they're going through, but we're very excited about it. I think the early returns and the early looks at Blackwell look fantastic. We expect almost a 2.5 times gain in the compute power that you get from Blackwell that we saw from H100s. And so I think it'll be a really material jump for customers once we get those out. And I think those will be early next year, and we're excited about putting them in customers' hands, and we'll get them out there as soon as they're available.
Investors, though, they find it wild, this whole frenemy existence that's going on. You truly think that investors here think, oh, we want to see NVIDIA dependency as well as AWS having its own offerings? Is that something you think everyone can swallow, or do you think ultimately there will be a broadening out other than just NVIDIA winning all?
I do think it's a partner. Like, if you think about AWS, we started from the very beginning thinking about this partnership mindset. And we built the entire business around AWS, thinking about how AWS would have services and our partners would have services, and that there's plenty of space for all of us to really grow and build our businesses. And that is true for software providers. It's true for service providers, and it's true for technology providers. And so I think that we've proven time and time again over the last 18 years that AWS can have products and our partners can have products. And then as we make them all available, that the whole pie gets bigger. And so I think there's plenty of opportunity for both. And so it really isn't. I think it makes for a fun narrative that it's either or, but we're great partners with NVIDIA. We will continue to be. And this is all about making the pie get bigger.
We love fun narratives, us journalists. Talk about that pie when it's to do with large language models. You are unveiling Nova. You are really saying that the Nova offering compares really well to other offerings out there when it comes to multimodal, but also from a cost perspective and efficiency perspective. Why invest so much in LLM provisions when you already offer the rest?
Yeah, and again, this is all about giving customers more choice. I think we, as Amazon, were investing in these models because we couldn't find the exact right mix of capabilities and customizations and things that we needed internally. So we started building them, and as we started building these, we saw that these models were actually getting quite good. The benchmarks were really good, and we were seeing some good capabilities come out of there. And our models are quite good at some particular areas. They're very good at executing agentic workflows. They're really good at pulling knowledge out of a RAG index. They're very, very low latency and low cost. And so we think that capability is going to be really compelling for a lot of use cases. We found use cases inside of Amazon, but even inside of Amazon, we use a mix of different models. We use models from Anthropic. We use models from Meta and Llama. We use models from a bunch of different sources. And so I think that hopefully customers see a lot of value from these new Nova models, but we also expect that customers are going to combine lots of different models in lots of different ways.
You haven't yet got the access to OpenAI, and for obvious reasons with their relationship with Microsoft, but do you think that will at some point unfold?
Look, I think my view is anytime customers demand something that eventually that sorts its way out. And I think OpenAI obviously has a great set of models as well, and I'm sure many of our customers would love to have those available in Bedrock as well, and we'd love to support those there. And I think I'd look at, and we have a long-term view on this, and over the long term, we'd like to make every technology available inside of Amazon and inside of AWS to use, and that means all of the models that are out there, we'd love to offer them in Bedrock. All of the software that's out there, we'd love to offer and make sure that it's available inside of AWS. Every service that everyone else and third parties are providing, we want to make available. And that all goes back to that choice story. And so in the fullness of time, I believe that we would love OpenAI models inside of AWS. We absolutely, it's, we listen to our customers, and if that's something that customers want, we're absolutely game. Obviously, with a partnership, it takes multiple sources, and there's probably some complexities in there, as you allude to. But I think in the fullness of time, it likely is the case.
In the here and now, you spelled out on the previous earnings that AI is already a multi-billion-dollar business, growing at more than 100%. Can you give us any more detailed numbers as to how large the AI offering is for AWS now?
Yeah, you're right. It is a multi-billion-dollar business for us, and it's really growing rapidly. Take Bedrock, which is our platform that lots of customers are building all of their production AI applications on top of. Bedrock has grown the number of users 5x in the last year alone. So it is just really a rocket ship growth of people building this. And I think what's really exciting is that people are using Bedrock not just to do proof of concepts, but they're using it to really deeply integrate with their own enterprise data and to launch production applications, which I think is a particularly telling sign of where the technology is going and where it's evolved to.
And clients willing to spend at a time of a lot of uncertainty, that we've got a new administration coming in. Do you see any concerns in terms of, well, geopolitics, your own supply chain, relationship with TSMC, for example?
No, I mean, I think, look, we've worked with various administrations all throughout the last 18 years that AWS has been around, and we're really excited to work with this administration. I think that everybody is interested in ensuring that we have technology continuity, and there's a ton of opportunity here. Like, this is how we drive the economy, and I think all administrations are interested in continuing to make sure that we're able to drive the economy forward. And AWS is a big enabler of that. And so we're excited to work with the new administration. I think we're obviously anxiously watch all of the geopolitical events all around the world to make sure that we're trying to insulate our customers as much as possible from any eventuality. But I think we're cautiously optimistic that we're in a good spot.
You might have been cautiously watching what was happening in South Korea today amid your own event. Any exposure there, Matt?
Sorry, I missed that. I was on stage, so I moved from stage right here to talk to you. So.
Okay, understood. But in terms of the South Korean political destabilization, nothing that was a worry there?
No, I mean, look, we have a region in South Korea, and we have many of our customers that operate in South Korea, and we'll continue to support them and operate with whichever government is in operation.
We thank you so much for your time rushing off the stage. AWS CEO Matt Garman.
All right, everybody, you've been listening to Bloomberg Technology co-host Caroline Hyde, our TV, radio, YouTube, and Bloomberg Original simulcast. Of course, they're talking with the Chief Executive Officer of AWS, Amazon Web Services. That is Matt Garman. If you missed any of it, you can check it out a little bit later on at Bloomberg.com or on the Bloomberg Terminal.
Remember where Andy Jassy was before he was CEO of
AWS,
all of Amazon.
right?
Yeah, he was at AWS.
I still think about like years ago, 10 years ago, I got to look and find the Bloomberg story of just when all of a sudden we found like cloud services was such a big part. Like it came out of nowhere. They finally started to separate out the business.
I remember that story.
Right? And it was like, oh, like all the streaming and everything that was going on in the cloud.
Yeah, I think it opened with Netflix, basically.
Yeah,
right?
exactly.
It's like you didn't realize you could be an Amazon customer without even knowing it because you're paying Netflix.
It's one of those stories you're like, oh, okay. Anyway,
turns
cool
out
stuff.
Still firing on all cylinders.
Doing just fine.
Hey, also doing just fine, kind of today, was the U.S. markets.
Yeah, we got another record, didn't we?
Another record,
S&P?
kind of figured out.
Yeah.
Still shy of 60 this year. Charlie Pellet has the full count.
Ain't done yet.
It's not done yet. Hey, let's go down to Washington, D.C. for a check of business news. And what's going on in the after hours? Here's Amy Morris. Hey, Amy.
All right, thanks, guys. South Korea's President Yoon says he's going to fix that martial law decree. He's going to lift it just hours after he imposed it. He called a cabinet meeting. He says he's going to lift it as soon as the cabinet convenes. The won took a hit when he imposed martial law, now 1.7% lower, trading at 14.28 against the dollar. Closing numbers, we bring them for you each day here at Bloomberg. The NASDAQ and S&P both setting new records. S&P gained 3 points, NASDAQ gained 77, and the Dow lost 77. Salesforce narrowed its revenue forecast for the full year. Shares of Salesforce up 3.8% in the post-market. Shares of AT&T gained 4.6% in the regular session after the company predicted a return to double-digit growth and a $20 billion share buyback by 2027. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris, and that is a Bloomberg Business Flash. Let's go back to Bloomberg Business Week with Carol Masser and Tim Stenevec.
Thank you so much for that update, Amy. Appreciate it.
We're excited because we have a pretty cool guest in studio.
Okay, so Carol, we do have a cool guest. I'm going to do the setup, okay?
Take it away.
Because over the last week, I'm thinking, okay, you got Thanksgiving.
Yeah.
Then you got Black Friday.
Yeah.
Apparently you have Small Business Saturday.
Yes, indeed.
I don't know what happens on Sunday, so I skip that one.
We'll take a rest.
Cyber Monday.
We do nothing on Sunday.
Giving/Travel Tuesday.
I know.
What's tomorrow? You're out of here. You don't care.
Giving Tuesday.
Wednesday? It's Giving Tuesday today. It's Giving Tuesday, yeah.
So is that your point?
What's tomorrow?
Oh.
Wednesday, something. I don't know. They need to figure out something for Wednesday.
You're confusing me, buddy.
All right, that's the idea. Last year in the U.S., people gave $3.1 billion. This is according to the Giving Tuesday Data Commons. It works with various data labs to source info around Giving Tuesday. For an idea about how this year is shaping up, we turn to Tim Cadogan. He is the CEO of the crowdfunding platform GoFundMe, which raises more than $50 million each week.
That's amazing.
He's back with us in the Bloomberg Interactive Brokers studio. Good to see you. How are you?
Hey, very good. Thank you for having me, especially on today.
I got to ask you, since we talked about Elon Musk before, and he didn't get the approval. Second time a judge rejected this massive pay package, and we said, that we don't necessarily have to do a GoFundMe page for him yet. Has anybody ever done a crazy GoFundMe page
for Elon?
For Elon?
I haven't seen that, but I have seen some high school students do a GoFundMe to get a tank to take them to high school graduation.
Seriously?
With Darth Vader Outriders.
Did it work? Did they raise the money?
Yep, they raised, I think, about $1,200, and it's a hilarious video. I mean, that's just one of many examples. So, yeah, all kinds of crazy stuff. But that's not typically a Giving Tuesday.
That's not typical. Well, so it's interesting that you're here on Giving Tuesday, because I do feel like GoFundMe is year-round. It's not necessarily the type of thing that is seasonal, like a lot of other charity. And I don't want to say charity. You're not a charity, but like a lot of charities that are given to on Giving Tuesday. What do you see on the platform around this time of year versus other parts of the year?
Well, I think the key thing to understand is there's two parts of our business. There's GoFundMe, the consumer personal fundraising part, which nearly everyone knows. And then there's Classy, which we acquired in 2022, which is non-profit fundraising. So it's software typically for mid-size and larger non-profits. These are people like the Salvation Army or Tunnel to Towers, which is a great New York-based charity, or World Central Kitchen. And for those organizations, you're exactly right. Like, this is the giving season. Really, Giving Tuesday is the kickoff for that. The three biggest days of the year are Giving Tuesday, 30th of December, and the 31st of December.
Those latter two for tax reasons, I imagine.
Yeah, people start like, yes, I've got to get going.
Got to get it in. How much of your business is GoFundMe, as the consumers know, versus the B2B part?
It's about 2/3, 1/3, roughly.
Which one's the 1/3?
The personal fundraising is the bigger part.
Okay.
But they're both big.
They're both big. Which one's growing faster?
They're both growing pretty nicely. And the interesting thing is that our GoFundMe personal fundraising business is in 20 countries, whereas our software, Classy business, currently is mainly in the US. So there's some big differences there as well.
Is it with plans to expand globally? Or
we hope so, yeah.
Yeah.
It's a little bit more complicated doing charity fundraising because there's more complicated legislation around the world.
Yeah.
How do you scale it outside of the US then? Like, is there, you target like a couple different countries where you understand the legislation? How does that work?
Well, with the personal fundraising, also there's legislation, but we look at how big's the market, how big's the GDP, what's the disposable income, and also is GoFundMe already known? So, for example, we just launched Mexico as our 20th country in April, and part of that was understanding that we already had 20-25% brand awareness, we had a lot of search activity, and we had a lot of people who wanted and were trying to set up GoFundMes in Mexico, but couldn't because it was not yet a supported market. We saw that demand. We're like, let's get in there. We worked through all the steps to set that up. And get it going.
Always working with local currency, do you think?
Yeah, it's critical. Yeah.
I'm just wondering if we're going blockchain yet.
Is there any crypto? Yeah, that's a great question.
We do offer crypto options for the software side of the business, actually pretty small.
Yeah.
Does that mean people giving with crypto?
Yeah, people giving. Yeah.
Because that's the thing that I think has emerged in recent years. It's not real. People are holding on to their crypto. They don't want to spend it. What they want to do with it is hold it like a speculative asset.
Sure. Yeah, we're not seeing a lot of people spending there.
So
we are seeing DAF.
It's not being used as a currency. Donor advised funds, you said? Okay.
Yeah, we've been offering that now for most of this year, and we're seeing a nice pickup there, and I think that's going to be a really strong growth area.
Okay, we are Bloomberg, and so I hate to ask this question when you're like helping people, and some of them in dire situations, raise money for a good cause. But so what's the business model for you guys? And do you just stay private? Does it make sense?
Well, two questions there. I'll take the first one first.
I added one on.
So it is an innovative business model. So we thought very carefully about this for the exact reason that you prefaced the question, which is we're here to help people help each other. And so we want as much money as possible going to the recipients of the fundraising.
Right.
So the only thing we take out is the transaction fees, basically the credit card processing fees that the banks charge us. So let's say you raise $100, you receive 97 and the 3%, 2.9% in the US is taken out. That's the transaction processing fee. The way we generate our primary revenue is ask donors to make an optional tip to us. It's a very simple UI. We have a suggested number, it varies, and then the user, without a click, can slide that to zero.
What portion of users actually give a tip?
Enough. Enough people are generous to us, they value the platform. Essentially, we're saying, you tell us what you think our service is worth, and if it's worth something to you, set the price.
What do they think it's worth, usually? Not in terms of money, in terms of percentage of the donation, of the contribution. I keep saying donation, but that's
it's a contribution to us. It's a modest percentage, should I put it that way?
Single digits.
Modest, yeah.
But it's enough to keep the lights on and enough to make you profitable?
Keep the lights on, keep us profitable, and critically keep us investing in product, technology, trust and safety, and customer service. Those are the key areas that we invest in.
Let's talk about trust and safety.
Sure.
Wait.
Yeah.
One quickie.
Yeah.
So without that, would you guys not be able to keep the lights on?
That's our revenue. Yeah, no,
That's
we rely on that is the way we generate the revenue.
But it hasn't always been like that.
It started out as a fixed 5% fee,
okay.
And then this is about a year and a half before I joined, 2018, I think late 2018, shifted to a voluntary tip model. which we think is much more in line with what customers want.
Do you make more from the voluntary tip model than you did with that blanket 5%?
That depends on the country and the donor, so it varies.
Trust and safety.
Yes.
How do you know what you're giving to is legit? I mean, look, I've used it, and I think I talked about this last year when we spoke to you, but, you know, my building has a block party every year.
Yeah.
And they use GoFundMe to raise money for the block party.
Thank you for doing that. Yeah.
I was on the board, so you're welcome. But, you know, I was one of those board members who didn't do anything. I know, shocking, right? There's always the one guy who does everything. Carol knows.
But I'm on the board.
Let's face it, it's usually a woman.
It is usually the woman.
Hey, listen, we get it done and we get it done in wheels.
Are we projecting here?
Yes.
Yeah, a
No,
little bit.
No. Truth.
But I do wonder, you know, that, so then you're reaching out to people who you know and you're actually going to see the fund. But I think oftentimes there are people out there who maybe stumble upon one on social media, or maybe they even just go to your website and, you know, you go to your website, you see them highlighted there. How do you know those are legit? They're going to the actual,
first,
what they're saying.
Making sure that people have trust in what they're, first, that they trust us enough to put their story up there, which often, as you said, Carol, is really important, and often some of the toughest things that people are going through. So they need to trust us as the person asking for help, and your question is more about the giver.
Yeah.
Can I trust what I'm seeing? So think about it in a few layers. First, you already hit on it. There's a huge social proof layer. The vast majority of fundraising is with friends and family and community. So you know the block party's real. And so you're going to give to the GoFundMe because you know that. And so most fundraisers do not make any progress unless they make initial momentum with the people that, frankly, know you, love you, care about you. So there's a social proof layer right there built into the way the model works. The second thing is we've had over $30 billion raised, many, many millions of fundraisers. So we have a huge amount of data that tells us what looks like a legitimate pattern and what doesn't. That's when the trust and safety team then kicks in, because if there's some behavior there that doesn't look quite right, then our team will look at that, make sure it's legitimate, or in some cases not. Actually, very few are illegitimate because it just doesn't work.
Wait, but how do you figure it out? Like, do you talk to the people? How do you figure it out to make sure?
Yeah, so then there's a couple more pieces coming in as well, which is once money starts to be raised, then we go put the beneficiary through KYC, know your customer, or KYB if it's a business, which quite a lot of people raise for a business, right?
Yeah.
And so that's both us and those banks I mentioned, those payment service providers. We're both doing KYC on the customer, validating that it is the person, that they are going to use it for legitimate means, and the funds are only released until that is all correct.
So how do you validate someone? Like, what is it that you look for?
We're looking for that their identity is correct, that it matches, that they're verified to their bank account information, that all the flows are clean and precise. And we're also looking for the donor activity to make sure that there's correlation and there's logical connectivity between the people donating, i.e. that they're coming from the community, and there's patterns of behavior that make sense. A little bit like what a credit card company is looking at, those kind of patterns that indicate that something is legitimate or not legitimate.
Is that your biggest expense? What's your biggest overhead?
Product and technology.
Product technology.
Is by far the area we invest most.
But is that development? Is it paying people, or is it servers? Like,
I'll
what is
come
it?
to that. I just want to hit one last thing, because
Please.
this trust and safety is so important. So,
because I can't tell you how many people are times it's like, how do you know? How do you, like, I've heard in conversations.
Here's the
people are
last
like,
piece.
How do you know this is real?
So we a few years ago we instituted the GoFundMe Giving Guarantee, which is a global guarantee. Any donation of any amount made worldwide for up to 1 year afterwards is covered.
Wow.
And that's great.
Wait, what do you mean it's covered?
So if there's any kind of problem, or you want a refund, you've got it.
Oh, interesting. From anybody who donates
Yes,
or
anybody who
contributes.
donates up to a year afterwards. Any
So if
amount.
someone didn't have fun at the block party,
That would be different.
they
That would
could
be
come
on
to you and
guys.
say,
That would be
"That's-
on you guys.
you guys didn't have enough snacks at the block party, so
I'm out.
I want my 20 bucks back.
I mean, the fortunate thing is we don't have to use that policy very much at all.
That's
because
great.
most people asking for help are real people, legitimate people, genuinely asking for help because they need it. That's what most humans do.
You know, when I see some of these big campaigns that end up going viral, I think to myself, and maybe it's because it's the Bloomberg in me, but I think to myself, this person is going to get a sudden influx of cash, and that cash might be to plan for their child's education if they lost a parent, something absolutely tragic like that, which unfortunately we do see with these campaigns. they need somebody on the side of, you know, wealth management or investing to help them manage a windfall such as that. Do you guys do any of that?
We don't. It's something we've thought about because you're absolutely right. I mean, someone's often put into a very demanding and unusual situation, and then they've got this influx of cash, which is a great problem, but it's a problem. But it's not something that we've gone into, and maybe it's something we can help with in the future. But I agree with you; it's something that's important.
Oh, go ahead. Please.
Sorry, you were asking about the product stuff.
Yeah, I mean, when you say the expenses in the product, is it about paying, you know, AWS for server space or whoever?
It's people, right?
It's paying engineers?
It is our product team, our design team, our engineering team who build a very unique product.
Is it hard to find them?
Actually, not terribly, because we offer a really interesting set of product and technical challenges to work on. And we offer a really rare combination of it's technically interesting, it's a well-paying job, and the purpose is bar none, right? You get to work on products that help people help each other. So it's a really nice blend. So we have we're very fortunate in terms of our ability to
Is there an average raise on kind of the individual side, the crowdfunding side, or the,
It's really hard to say because it is across
Really?
the board. Yeah,
you have the data.
The average is meaningless, though. Here's the problem, right? The average is meaningless because it includes some really small things and some gargantuan things.
What's the biggest amount that's ever been?
The largest amount was $45 million raised for actually a campaign, a fundraiser on GoFundMe.org, which is our sister, which was America's Food Fund, which was set up by Laureen Powell Jobs and Leo DiCaprio, and that was in COVID, so for food insecurity.
Wow, that's
the
pretty
largest
amazing.
number of donations ever was for the George Floyd family fundraiser.
Wow.
How much is that?
That was, I think, about $14 or $50 million, but the largest number of
individual donors.
From about 150 countries.
Tim Cadogan, thank you so much. Really appreciate that. The CEO of GoFundMe joining us right here in studio. Happy holidays. And contribute. Donate, everybody. Can I say that?
Stefano. I'm the owner of the family office and the company called Company I Limited. I also have a live streaming channel for startups. It's SG Trader, so we let startups to pitch investment community on our channel. I give them 3-minute pitch. We publish their video on our channel, and everybody who is interested, please welcome to send me your video, and I will roll for almost a month your video for all financial community. The channel is live, it's streaming live 5 days a week, from morning to night.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
It's 4:40 on Wall Street. I'm Amy Morris, and Wall Street is on a new records streak. The Nasdaq just scored 2 in a row. This is day 3 of records for the S&P. Nasdaq up 77, the S&P up 3, and the Dow is down 76. Federal Reserve Bank of Chicago President Austin Goolsbee says interest rates still need to come down a, quote, fair amount.
The most important part is to look at inflation and not just the aggregate, to kind of break out the categories. And so my pet thing has been housing inflation.
Chicago Fed President Austin Goolsbee. Federal Reserve Governor Adriana Kugler expressed optimism about the trajectory of inflation and broader economic conditions. She did underscore the central bank's policy decisions are not on a preset course.
The labor market remains solid, and inflation appears to be in a sustainable path to our 2% goal, even if there have been bumps on the road along the way.
San Francisco Fed President Mary Daly telling Fox Business an interest rate cut this month is not for certain, but remains on the table for policymakers. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris, and that is a Bloomberg Business Flash. Tim and Carol.
Thank you so much for that update, Amy. Do appreciate it. Let's talk about retirement homes.
Yep. Not ready for retirement, but a lot of people are, and a lot of people have definitely tapped into those retirement home communities.
Okay, so at least 16 continuing care retirement communities, or CCRCs, have filed bankruptcy since 2020 as pandemic restrictions, labor shortages, soaring wages, and rising supply costs have pushed many to the brink. As Bloomberg News reporter Martin Braun found, bankruptcy means that those who sometimes fork over hundreds of thousands of dollars, which can be their life savings, find their money and their home have disappeared when one of these companies goes bankrupt. Martin Braun joins us here in the Bloomberg Interactive Brokers studio. This is surprising to me for a couple of reasons. I thought these places were so expensive to live in that they were raking in the cash.
They are very expensive to live in, and if you sell your house on Long Island for $900,000 and you fork it over, you think that will be enough, but you're paying for care through your life, through independent living, and then maybe assisted living, and maybe even skilled nursing. And that's very expensive. And then the upkeep of the place is expensive. And people are living longer. So healthcare just generally is more expensive. So there are a lot of variables. And, similar to kind of long-term healthcare insurance, it's very hard to price the risk, the cost of living in these places. So.
Wait, explain the fork over. I've seen, how much are people forking over to live in these communities? You say, you sell your home for almost $1 million out in Long Island. How much are you forking over? And I know it probably depends on where these communities are, but give us an idea.
Well, yeah, it depends on the market, but most of that, we're talking. I think in the Harborside, the story that I wrote, there were apartments that were going for like $2 point something million. So
people are forking
you're paying a lot to get in. You figure you're going to be taken care of for the rest of your life. The thing is, you are entitled to, and under certain contracts, you're entitled to a refund, or your heirs are entitled to a partial refund when you die, or if you move, you're entitled to a refund. But that money is not.
You don't often move. I'm just going to throw it out there. You don't often move.
Most of the time, you don't.
Yeah.
But that money isn't put in escrow. That money is being used by the community for operations. So. What's happening here in the Harborside is, if it goes bankrupt, then the residents are treated as unsecured creditors, which means they're behind the bondholders, which means they're like any trade, creditor. So,
Whoa, read the fine print.
Yeah.
Yeah, and these contracts are they're not simple contracts. You need to have a lawyer and a financial advisor to look at these contracts.
Is this sort of boilerplate for these types of facilities? Like, does it depend on what type of facility you go to if you're treated like this by creditors? Or
it depends. It depends on the bankruptcy. It depends on the situation, and not all the bankruptcies work out the same way. In a lot of cases, what they try to do is a new operator will buy the facility and, if possible, try to maintain the obligation to the residents and keep them whole, because that's not a great marketing tool if you're buying it. You're not guaranteeing the obligations of the refund obligations, but that doesn't work all the time. So sometimes, and this happened in Detroit, Dearborn, Michigan. Place goes bankrupt. The residents are unsecured. They get 25 cents on the dollar, and the bondholders are paid in full. So it depends on the bankruptcy. Even it's case by case.
Help me out, Martin, because it seems like it would be a good business model. People get old, they buy these properties,
and boomers are aging right now.
Right.
So there's more and more of people going into these places.
Like, I have to say, I've had personal experience with my mother-in-law who bought into a beautiful community. Like, we were like, can we move in? Kind of thing. But they feed you.
You can move in, just so you know, for a price.
It's very social. You're funny. Very social. And then, unfortunately, when she needed more care, you kind of move into the assisted living, and then there's kind of even more and stuff. And it does get very, very expensive. But I mean, I guess it felt like it was a great business model. Why are they going belly up, or why are they going into bankruptcy?
Well,
What's happening?
It's not, it's not all of them, but I think
those that are, what's going on?
Well, I think there are other factors. I mean, it depends on the quality of the facility. Like new facilities, if you're a new guy on the block, people will move to you, and then you're at a competitive disadvantage. So fewer people want to move in. If fewer people move in, you won't be able to pay off the entrance fee refunds of the people who are dying or leaving otherwise. So that's a factor. There's always competition, and there's people are choosing sometimes to live at home longer and not. They want to be independent, and they want to just stay at home. So I think there is this a huge demographic wave. And these things continue to be built, but.
God, I remember how many investment advisors for a long time.
My gosh.
Retirement communities, good thing, like in terms of a REIT play or so on and so forth. In terms of rules, regulations vary from state to state?
Yeah, it's very, there are 41 states that regulate CCRCs, and I haven't read all the regulations or even fraction of them, but
that's okay.
Well,
you do include in your story, and to be fair, because you did all the reporting, New York is among 17 states that require them to maintain reserve funds.
Yeah.
So I'm assuming if they get into some they
Yeah,
have some
they
pad,
have- there's
like a
cer-
bank, right? Like you have some pad.
Yeah, there's some states like New York, California, they have stricter regulations. They require these reserves, debt service reserves, liquidity. But
Yeah.
other states are very hands off, and they probably have disclosure rules that they have to. If you move into one of these facilities, you have to look at the contract. But I mean, I think that. And my mom is actually looking at one of these places right now, and I'm saying,
Yeah, my grandma's in one right now.
You really need to look at the financials before you move in.
Yeah.
Who would have thought, though? Like,
But there's also places where you can rent rather than buy.
Yeah.
And then as you need more services, sometimes
you
there's
move from one area.
up
Yeah,
to
that's what.
a top floor or something
Yeah.
where for individuals with Alzheimer's or where you've got to make sure that people can't get hurt or hurt themselves, and there's a little bit more oversight and care.
Yeah, I think I heard it while reporting the story that the rental model is becoming more prevalent, just because I think it's more flexible for the really to know how
That's
much.
something my dad did, so that's my experience.
And I
with
assume it
that.
also doesn't involve as much upfront capital either.
No, I think in the rental
Does
you just pay the
Yeah.
whatever it is. You don't pay that huge chunk.
And as you need more services, you basically, it's kind of like a la carte.
Yeah, that's
in a weird way.
Yeah, it's expensive. Getting old is very expensive.
It's incredibly expensive.
Just put me in a catapult and just send me out in the ocean. That's what I want to do.
Yeah?
Yeah, that's what somebody I worked with here.
Paul Sweeney has his own way that he shared recently.
What did he say?
It's very good. It involves skiing. That's all I'll say.
Off a cliff.
It's very interesting. Paul, I'm going to encourage. It's great. I think I might borrow it. It involves skiing, a steak, and some wine.
Listen, this is a great story, and just kind of eyes wide open in terms of some of these things. Make sure you know what you're getting into. Martin Braun, thank you so much.
Thank you.
Totally enjoyed it. We saw this story. Tim caught it, and he's like, we got to do this story. So I'm so glad. Bloomberg News reporter Martin Braun covers a lot of the municipal bond market. Right?
That's right.
Yeah. Catch him out at Bloomberg.com.
listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Is your flight on time?
It says so. It's coming from Florida. It looks like it's going to arrive.
You know what's funny? I have a friend who's...
You have friends, Tim Stenevec?
Well, they
He
have to
probably
fly
has tons of friends.
out of state. To be
He's such
fair,
a nice guy.
To be fair, they do have to fly in from other states.
Oh,
So yeah, don't have that many in New York.
There are no friends like within the New York
it's in the
metro
no friend
area.
zone in the New York metro area.
He's got to fly in.
Adam's flying in from Minneapolis tonight.
Adam.
Checking his flight. He's still set to take off in a few minutes.
Where's he coming from?
Minneapolis.
Minneapolis.
Yeah, set to take off in a few minutes.
No delays?
Not yet. Fingers crossed.
I know. I got to check the wind gusts. My concern is they'll get here. It's a really late flight, and if I know it's like a 10 o'clock flight, and so if it's really gusty, whether or not the planes can take off safely.
I'm going to give you another bit of advice from Paul Sweeney,
What?
who told me, great advice from Paul Sweeney, always take an early morning flight.
I would, but I have a job.
Oh, okay.
And I was trying to get in there so that I could kind of hit the ground running tomorrow.
But I do that now.
I know. What?
When I can.
I know. Take an early flight.
Yeah, thanks to Paul Sweeney.
Because the delays, that's my preference. Always get out early because before the delays start hitting. All right, everybody. We did mention another record on the S&P 500. What a day. It really was one of those days geopolitically where it was hard to kind of keep up with the headlines, whether we were looking at France. They've got an important day tomorrow. South Korea, martial law, not martial law. Where am I leaving out? Syria, stuff's going on in Syria.
Yeah.
What am I leaving out? I'm probably leaving Georgia, the Republic of Georgia. There are some protests there. There's stuff going on. And then, of course, at the backdrop, we still have U.S.-Ukraine. I think this is the third winter. Not U.S.-Ukraine.
Did you talk about France?
Ukraine and Russia. I did mention France. And then, of course, you got the Middle East. Truce, no truce. No, we have a truce. They say they have a truce, but...
Okay, you're looking around the world.
I am.
I'm looking a little closer to home.
Where are you going?
I'm going nuclear.
Really?
Yeah, this is interesting.
Where are you going?
We'll wait out with a story that says Meta Platforms, the company formerly known as Facebook, seeking as much as 4 gigawatts of new nuclear energy to run data centers and support the U.S. electric grid starting in the early 2030s.
Listen, all of these big data companies, AI, lots of data centers, and then you got to figure out how do you run them and how do you maybe run them efficiently.
This is wild.
Big. This is big.
So Facebook's parent company is asking developers to submit proposals to deliver 1 gigawatt to 4 gigawatts of reactor capacity. That's according to a statement today. Commercial nuclear reactors typically generate about 1 gigawatt of electricity. That's enough for 750,000 typical homes. That's how much. That is so much electricity.
It's a lot. And you think about our power grids that are already tapped, and you think about, okay, you are looking for ways to not necessarily generate more carbon for the atmosphere. Remember, it was just in September, again, another Will Wade story in Dina Bass, the owner of the shuttered 3 Mile Island nuclear power plant in Pennsylvania, investing $1.6 billion to revive it, agreeing to sell all the output to Microsoft as it looks for carbon-free electricity for data centers to power the AI boom. I mean, this is the other side of AI. Like, everybody's talking about it, but you need the data centers essentially to run it. And the more complicated the computations that are being done simultaneously, it's a lot, and you need a lot of power to do it and do it well. And so it's really kind of fascinating to see all of a sudden people looking at nuclear power as the alt energy to make all of this possible.
I wonder where they're going to do it.
What do you mean? Oh, where they're going to do it? I don't know. This is interesting. I think about the individual we recently talked to. Was it the nuclear power company? I forget.
Yeah, the nuclear company.
The nuclear company.
Yeah, they sort of handle they're like a middle person, right?
Right.
They kind of handle
They don't actually build
they
or
don't
own.
Yeah. But this, and Will has talked a lot about this with us, Will Wade. Not a lot of nuclear projects here in the U.S. in the last 3 decades. Vogtle 3 and 4 in Georgia.
The thing is, how quickly can you do this stuff? Like, these are...
Go ahead.
I mean...
Oh, they
either have to be put online or built.
Oh,
too,
yeah.
Right? Like, I mean, we're talking a while.
Yeah, well, that's why there's I think so much investor excitement from the venture capital side and these SMRs, these small modular reactors. But that tech is unproven here in the U.S.
Right.
So it's unclear if they'll be able to actually do those. But the idea is, okay, instead of, the infrastructure costs that go into building one of these huge 3 Mile Islands, or Diablo Canyon or Indian Point plants,
Right.
it's like a, much smaller CapEx.
I mentioned Microsoft at 3 Mile Island, that reactor, which is now owned, I think, by Constellation Energy. Earlier this year, Amazon.com's cloud computing division agreed to spend $650 million to acquire a data center campus connected to Talon Energy's 40-year-old nuclear power plant on the Susquehanna River in Pennsylvania. So all these old plants, I think people are trying to tap into, get agreements, and then I guess try and move forward.
What do you do with the waste?
Well, this is the thing. This waste doesn't go away anytime soon. I know people talk about, you reuse it and you continue to reuse it, and we'll